Hey guys, what's up? Peter here. Welcome to episode 43 of the weekly market outlook with TradeXprop, where we dive straight into the upcoming forecast for asset classes like forex, commodities, indices, and many more. But without further ado, let's get straight into the video. Alright, so well, April's been crazy, right? We have now come into May. And as you know, we did see NFP reports drop, but before I get into that, I do kind of want to recap April, right? We saw, wow, just a crazy time in the markets, right? We started off the month seemingly normal, and suddenly, bam, Trump tariffs, right? Recession fears, bulls and bears trying to take control of the markets. And I hope that some of you may have gotten good gains, because the market is seemingly very volatile. I hope most of you didn't lose your accounts or didn't blow any accounts too quickly with all these Trump movements in the markets and Trump trades. But always remember, when Trump's in the market, you do kind of want to at least tone it down a bit, because the average daily range and the average session range in general, if you look back to data from like 2016 comparatively to times where Trump wasn't in the office, you are gonna see that the market moves quite crazily and erratically throughout the day, throughout the week, throughout the month when he's in the office, right? So always keep in mind that Trump would just suddenly come out with an announcement, so always have to keep an eye on that before you get into the trading session or when you have positions open going into it. Really, even when you're in the session, he could just drop some random thing, and that would boom, completely ruin your pre-market or pre-session analysis, right? So yeah, keep your account safe. Always keep an eye out for the latest headlines, and just play it safe. Okay, but before we dive straight into charts, I kind of want to recap what we saw last week in terms of the news releases, right? We did see NFP report come out pretty good for the US economy, right? We saw 177,000 jobs added compared to the forecast of 138,000, and that's a solid B plus for the markets, right? It is good for the economy. We also saw average hourly earnings soften just a bit, right, compared to forecasts, which is pretty much good for the inflation story, because less wage pressures means less inflationary heat, right? Apart from that, we also saw the unemployment rate held steady at 4.2%, with the previous data release and also with forecast, right? So that pretty much did nothing for the markets, but looking at this data set right here, what we can see is that this is the Friday candlestick, right? So right here, post NFP, we saw many indices climb because we saw many stocks also climbed, right? We saw the Nasdaq right here actually regain. Let me just remove this. Regain price above this structure point, right? We saw price try to recapture it, ultimately failed, and now we have recaptured it, held it once again, and now we're holding above that level, right? So the same thing is also that we can see right here on the S&P, that same coinciding level, since these two are correlated assets, right? We saw price recapture, and not just recapture but also hold above this level after what seemed to be a crazy April, where it was down it was down 15-16% on the S&P at one point. Same thing goes for the Nasdaq right here. If I pull it up, US 100, NAS 100 USD, it was also down like crazy, 18% at one point, right? But now it's coming back, closing above the high, before that drop right here. So at the moment, right, optimism is definitely what the sentiment's about at the moment, right? We're seeing tariff fears easing, as trade talks kind of heat up with China, Canada, and Europe, right? We're seeing good information from Trump coming into the markets, where it may be going good, the trade talks. Okay, so at the moment, with that in mind, with all this previous movement, I did say that back then down here, I wasn't exactly bullish on indices, right? We did see that big buyback, of course, but I think that one was pretty much in response to this being a reactionary move right here. Normally when an asset class tanks heavily or rises heavily, based off of just people panic selling or buying, later on in the week or after that day, we're going to see the market being bought back or sold off, because this is just this just isn't a sustainable move in the first place. It is purely just based off reactions, right? So we saw that move being bought up, and at that point in time, I still wasn't exactly confident or confirmed at least that the markets were bullish, that this is the bottom. I wasn't exactly sure just yet. I definitely did think that we could have seen price push higher, retest some resistance, and then suddenly do a tank. I did think that was possible, but after the shift in sentiment and after this bullish leg was formed, I do think that at the moment at least I have switched to being cautiously bullish on indices, right? The sell-off right here, it definitely made a lot of big stocks affordable, right? People were buying in like crazy at discounted pricing, including myself, not on CFDs, but just on my own ETFs or on my own personal accounts. And seeing with Trump currently softening tariffs, we definitely could see a push higher for the indices, right? So right here on the Nasdaq, we are currently above the 200 period moving average right here, which is the orange line. We've closed above it quite convincingly. At the moment though, I don't think this is going to be the move for us to pop higher. I do think that after coming into this area of resistance around the 20k mark to 21k mark, we could see a slight pullback into some areas of support. For example, down here we saw price respect this support at 18k to 19k. So I do think we could come lower into something on like the 4-hour, for example, right, to retest some of these areas to then bounce higher. I do think that's possible. Obviously I could be wrong, stocks could just rip higher, pass this high, ripping and breaking out of these areas of resistances. That's possible, right? But I do think, seeing as how we've just been closing bullish quite steadily, like 9% in the past 9 days, I do think that a bearish pullback is on the cards before I continue to move higher. Okay, so that's what I'm looking for on the Nasdaq. Definitely still cautiously bullish. I want to see price take out these highs and make all-time highs. Climate at the moment is still bullish. We are at the moment we might come into a slightly range of overextension, where currently we are at 7, and then in the past, based off the statistics, the normal count based on one standard deviation is 7, which means 68% of the time, once we reach 7, then we start to see a bearish climate form, and then price does a pullback, right? So this fits the overall narrative for this pullback. Same thing goes for the S&P 500 right here. We also just reclaimed the EMA, tapped this level, really similar price action, but we just have less of an area of resistance, like above current price action to push price lower, right? But I do think that we might see that happen. Same thing for the Dow Jones as well. Move these drawings real quick. I do think we could come into this area and push lower, right? The difference between the Dow is that we have a big area of resistance up top, and we haven't reclaimed that 200 period moving average, and we don't have a daily support down below, right? We will have them on the 4-hour, on the 1 hour as well. We will see them, right? But definitely as of now, there just isn't a daily support that's nearby. So you could look at the NAS and the S&P for your daily supports compared to the Dow Jones. Okay, so looking to next week, we do have bank holidays for the Japanese yen as well as the pound on Monday. I think this is Good Friday, but for the US dollar at night, we do have PMI data come out. For Wednesday, we have PMI for GBP, construction PMI, and we also have the FOMC statement and the federal funds rate at 2 a.m. local local Malaysian time, which is on the Thursday. So this would be Wednesday in the US at 2 p.m. Okay, so quite a packed week. Normally after NFP, we will have a packed week as well for unemployment claims and a bunch of different news releases overall. For the federal funds rate though, the odds are, I think, May's off the table. I don't think that we're going to see a rate cut in May. June is at the moment 50-50, right? But I think July is when we're likely to see the first rate cut, because at the moment, even though we do have some weak spots in the US data, we don't really have any strong signals of a recession. So I don't think we are going to be seeing a rate cut anytime soon, maybe until July. But of course, this one is based on the current sentiment. That could definitely well on change as we progress into the month and into the quarter. Okay, so yeah, that's what I'm looking at for US indices, right? Let's take a look at the Forex pairs, right? First off, not that, I go to TVC. So right here on the DXY, we are well below the 200 moving average. We have formed and we have actually just tapped this support right here. So I definitely do think that we could potentially see higher prices. However, I don't know if this would be a really clean move higher. Okay, what I mean by that is, yes, we are above the $100 level, or the 100 level, which is quite critical, right? Because we're testing it right now. If I just mark out where we currently are, we're testing it, and we don't have any strong conviction that we are likely to see price bounce higher off of just the technicals. Of course, if I wanted to see strong dollar, I want to see this kind of closure above this level, right? So something like this, but we didn't see that. Okay, so with this in mind, if we fail to gain this level and we fail to maintain above it, there is a pretty strong chance that a closure beneath this level is likely to send the dollar lower into something like 90, 95, even 90 down here is technically possible, right? But that's just a ways, quite some ways away from where we currently are. So at the moment, the economy is steady. It's not stellar strong. It is not stellar weak as well. It's just steady. Okay, it is steady, but NFP just wasn't enough to sustain dollar bulls. And the sign that we're seeing that is we're failing to gain this level. So I think mainly, even though the economy isn't doing too bad, the reason why it's not holding strong is because of the uncertainty surrounding tariffs, right? And with that being the main factor of subduing all of these gains, it wouldn't be wrong to say that, at the moment at least, I am pretty much neutral on the dollar index as of now, right? Unless we could retest this, push higher, come into the 104, 103, 101 to 104 level, retest the EMA, sustain above it, then I could say, what, the dollar strength is coming back in. We are going to be seeing money flow back into the dollar, but I think that in itself requires some push, right? That in itself requires either really strong data or really optimistic trade talk escalations, right? Really positive trade talks progressions. I think that's what we need to see price hold steady above the 100 mark, and then breaking to reclaim some of these areas right here. But as of now, we haven't seen that. There's no fundamental backing for dollar strength, so I do think we could spend quite some time right here just trading in between this range. Okay, so with that in mind, you go to the euro dollar right here, euro USD. Yes, we did kind of just range above here, but we could right now break this range, come lower into this support, and then bounce higher, right? Because the dollar is pretty much steady where it is. right? And now investors are likely to shift from the DXY to Euro right now for liquidity, right? Even though it is kind of overvalued, right? We're seeing a bunch of like overextensions based on the climate, but that doesn't really stop it because the markets in the long run pretty much move based on the fundamentals and the macro analysis. Okay, so definitely, we could see price break above it and just retest that range right here, or we could see price recapture some of the liquidity around this area, retest its support, or maybe even come into the lower band of that EMA, bounce off of it, and then go higher into this area of resistance right here at 1.17 to 1.19. That is also very possible. Okay, so that's what I'm eyeing for the euro dollar. The same thing is happening as well for pound yen. Let's remove this. So for pound yen, even though it does look like we're caught in a big range on the bigger picture, always keep note that this is like a freaking 8% range. It's like a 16,000 tick range, right? So 1,600 pips range for you to trade with. Although there is no clear direction based off how we are shopping in between the 200 EMA, but pound yen is catching a bit as risk on sentiment currently grows, right? But of course, the divergent central bank policies, things like the hiking of rates by the Bank of Japan, Bank of England's cutting rates, it makes it a bit tricky. So I think what I would like to see is price hold above this 200 EMA, respecting this level of support, closing strong bullish, and then we could see some movements to take out these highs at around 195 and even 198 right here, taking out this high and then ultimately moving higher to take out this high. But I would need price to close strong bullish above, sustaining itself above the 200 EMA and also the support right here. That's what I want to see for bullish pound yen moves. Okay, but enough of forex, enough of indices. Let's take a look at gold, everyone's favorite pair, including mine. Gold ETFs have been keeping my portfolio alive, seeing as how I am technically a perma bull on gold. I've mentioned that many times, but I do think that gold is a great investment to put your money into. Any spare cash is fine. You can invest in fractional ETFs. That would also be good. If not, you could put in the full value of each ETF share. But anyway, before I get out of topic and derail myself, let's take a look at charts. So currently super overextended with this move right here. You could draw a fib from this swing low, this swing high to this swing low right here. We're currently within the 50% of the range, which some people might deem discounted pricing. So definitely you could look for continuation longs within this area. Maybe you have this fair value gap, some previous resistance, breakthrough support. That's completely valid. The way I do it is I like to use my indicators, right, which is the auto UFOs. This is a very mechanical way for you to find areas of potential support and resistance based off of level 1 data, right? Link is in the description, but I won't spend too much time right here because this is not the point of the video. The point is that gold is dropping as peak fear fades, right? We're seeing some slight pullbacks, and I think the main cause for this is because of the 90-day tariff pause, and also just the trade talks are progressing really well, and that just stabilizes the markets, removes a lot of uncertainty, which is bad for gold because gold thrives in uncertainty. It thrives during war, it thrives during hyperinflation, during market crashes. But with this uncertainty cooling and we are seeing some stability returning to the markets, it's currently struggling. Of course it's struggling right now, but when you look at the overall market moves, it's been going crazy, right? We gained like 1,000 points in like 2 years from the end of 2023 to currently, in just the span of 2 years, we gained 1,000 points, which is crazy, because back then we only gained 1,000 points in a decade, and now we've done it in 2 years. So that is why I say, zoom out the weekly to the monthly. Gold is still ripping on, on a crazy run for the generations. Don't look at the daily or even the 1 hour and see that just because we're seeing some areas of resistance forming, we're seeing price break beneath the EMA, we're seeing bearish flows, that we're gonna go lower on gold. We definitely could, but that's just like the short-term move, right? We could see bearish pullbacks for sure into areas of support where we can see bounces higher, right? But currently at the moment, yes, I do think that gold might be in play for a bearish pullback, right? We're seeing the VIX contracting, right? If gold breaks past this level, these might not hold anymore, because it's looking at from a structure perspective, right? Boom, boom, boom. If this fails and we get a strong closure beneath it, we would have dropped from the peak. We would have dropped 20%, and that is normally when people start to say that a downtrend is now in play, right? So if we don't hold beneath this level, we might be in for a short-term bearish run, right? But of course, I would like to see price come down lower, retest the EMA, then I'll make a decision from there. But just letting you know that the structure point is very important around the 2.9k mark. Super important. Okay, super important. And take a look at silver right here. Move that. Silver is chopping, right? We did slightly dip down beneath the 200 EMA, but we immediately bought back up and we're trading above it. If we do come down to retest this EMA, find some support around this area, we could see price come up and take these highs. Silver technically in terms of a percentage basis is constantly outperforming gold, right? But it is just a pair that isn't that popular when you compare it to gold. But don't sleep on it, guys. Silver moves a ton more than gold when it's ready, right? It moves a ton, and definitely I think right now, if we do hold at this level, definitely we still have price for the markets to clean up. Okay, right here at these highs at around $34, we still have price, and the markets could see that price. Okay, sorry. What I mean is we definitely could still see price reaching those levels. Okay, so yeah, that's pretty much it, I think, for this week's outlook. Definitely do pay attention to the crazy news-ridden week upcoming, right? But definitely don't let that scare you. Macro analysis and fundamentals, they still drive the markets in the long run. Sure, solid NFP. We're seeing indices climbing. We're seeing trade talk escalations go well. The dollar is currently at a very important place where it has to regain higher to show strength. If not, it might climb down lower. But of course, definitely just wait to see. If you are uncertain, don't enter. But if you are certain in your model and in your analysis, who's to say that you might be correct and I might be wrong, right? So yep, thanks for tuning in. I hope you guys enjoyed the video. As always, if it did help you in some way, and if you'd like to see more coming from this channel and from me, as well as the team here at TradeXProp, just leave a like, subscribe, it helps us out a lot. But also check out our funded accounts on our website. We have one of the cheapest and most affordable platforms and prices in the industry that is going to be very monumental in helping out undercapitalized traders that can't afford expensive funded accounts. Okay, trade smart, trade with our capital, not yours, and play it safe, right? Trading is a long game. Make sure you stay alive long enough for you to be profitable. Okay, so yep, peace out. See you in the next one. Bye.